Today's macro landscape sends a rare signal. The dollar index holds near 99. The 10-year Treasury yields around 4.1%. And gold trades close to $4,000 per ounce. WTI oil sits near $60, suggesting slower but stable growth. Normally, strong yields and a firm dollar pressure gold, but markets are quietly rewiring the logic. So the real question is not why is gold high, but what kind of trust shift lets these prices coexist. For investors, this mix feels unnatural. A near $100 index and 4% yield imply solid returns in U.S. assets. Yet gold at $4,000 is a trust premium, a price that exists only when large players pay for resilience and insurance. If the system still relies on dollar stability, why does it also require such an expensive anchor? Maybe it's not a contradiction, but a transition. Let's decode it in 3 layers. Layer 1: real yields and opportunity cost. Even with nominal yields above 4%, inflation and uncertainty compress real returns. The true cost of holding gold shrinks when the market doubts how durable yields are. Gold becomes a parallel store of optionality. Layer 2: central banks and institutions. Major institutions keep accumulating gold even as prices rise. That suggests structural diversification, not speculation. Gold at $4,000 is a strategic allocation premium, not a spike. Layer 3: distributed trust. The world is no longer binary between fiat and hard assets. Trust is spread across a basket: dollar, bonds, energy, and alternative stores like gold. That's why a strong dollar and high gold can exist together. The system is building multiple anchors instead of one. Now, how do we observe this without panic? Use a simple 4-signal map. Dollar versus gold. When both rise, markets pay a premium for flexibility. Yields versus equity volatility. High yields and rising volatility mean capital costs are pressuring risk assets. Gold versus credit spreads. Firm gold with stable credit spreads signals a gradual trust shift, not panic. Oil around 60 suggests a functioning but adapting world where capital diversifies rather than chases extremes. This framework doesn't tell you what to trade. It shows how capital votes with its feet across forms of trust. When you see headlines about $4,000 gold, place it beside a $99 index, 4.1 yield, and $60 oil. It reveals not a crisis or miracle, but a slow rewiring of global trust. If you want the data before it becomes the headline, and prefer structured clarity over noise, subscribe to Global Pulse 360 Live. Here's the signal behind the noise: Global Pulse 360 Live. This content is for informational analysis only and does not constitute financial advice or market prediction.